Swatch is an international retailing consumer product company, but they've done some very smart things in their acquisitions. They are the largest manufacturer and distributor of watches, and all the way from an inexpensive Swatch to, with their recent acquisition of Harry Winston, they are distributing very, very expensive watches. So we think that the European consumer will be feeling better, and again that Swatch is positioned well globally.
So they can make it as a luxury brand name as well, do you think?
They are the masters. They are the Swiss masters of making watches.
In the U.S. there's a stock you like, and it's an old stock, but it's the new U.S. Airways. It merged with American Airlines. There were these concerned about antitrust issues. You think there's upside from here? That stock gained about 65% so far this year. So why is that a value? And I know airline stocks always are tricky investments, are they not? It just seems when you look long term, you don't get those straight up kind of stock charts.
That's right. That's right. They are tricky investments, but we do think the airline industry is actually now a more sophisticated industry. And you won't have as many big surprises, if you will. They're better at hedging fuel cost, filling capacity. It's just a smarter industry.
They have a lot of debt, though. Is that
they do?
Is that a
they
concern?
do. Now, well, yes, and I hate to say it's a high flyer, excuse the pun, but it is because of U.S. Air and now American Airlines. Debt levels we consider a more speculative equity. But again, that's part of why we get so much upside, because we think the cash flow that will be realized from this merger is higher than even what the street average is.